Welcome to the Fintech One-on-One podcast. This is Peter Renton, co-founder of Fintech Nexus and now the CEO of the fintech consulting company Renton & Co. I've been doing this show since 2013, which makes this the longest running one-on-one interview show in all of fintech. Thank you so much for joining me on this journey. Now let's get on with the show. Today on the show, I am delighted to welcome Zuben Mathews. He is the CEO and co-founder of Brigit. Now, longtime listeners of the show will know that I am very passionate about financial health, and I love featuring companies that are doing good work here, helping those, particularly those people that are living paycheck to paycheck. And that's where Brigit lives. And they have done some great work over the last several years, helping millions of people. On the show, we get into obviously all about what Brigit offers. The founding story is really interesting as well. We talk about the overdraft landscape. We discuss earned wage access in general and particularly the CFPB's stance on this. We talk about how they measure whether their customers are becoming more financially healthy, which I thought was really interesting, and much more. It was a fascinating discussion. Hope you enjoy the show. Welcome to the podcast, Zuben.
Thank you, Peter, for having me here. You've been doing this for quite a long time. You're a true fintech expert, so always a pleasure to talk.
Always great to talk with you as well, and thank you. So let's kick it off by giving the listeners some background. I know you've been doing Brigit for a while now, but tell us a little bit about, one, how you came to be in this country, and then two, some of the career highlights to date.
Sure. I mean, in terms of how I came to the country, clearly I'm an immigrant, hence the nature of the question. I came here when I was 18. I'm starting to date myself, so let's call it over 20 years ago to study college. I was fortunate enough to get a full tuition scholarship at the University of Chicago. That's kind of where the thesis of Brigit started to come about, because as an immigrant, fortunately, I had, as I mentioned, a full tuition scholarship. I had 2 jobs, part-time jobs, and I was living within my means while my single mother was sending me money. But yet, somehow, even 20 years ago, I couldn't get myself a credit card because I didn't have a credit score, and my expenses were always a couple of weeks ahead of my income coming through. So that is the core genesis of what Brigit is today and what we're trying to solve for. But to answer your other question in terms of my career, well, did a lot of learning from personal experience while I was in college. Again, I was studying economics at the University of Chicago, but following that, I ended up working in an investment bank where I ended up understanding and reading financial statements, looking at software and fintech companies, understand from an investor point of view what people were looking at when they were investing or looking at buying companies. And at the same time, you get to truly understand the inside working of a bank. So that the core thesis, again, I know that wasn't a complete question, but my education and the coming here as an immigrant to the United States 20 odd years ago with the same fundamental problems that existed when I was there. Again, an inability to build a credit score because you need to be in the credit system, or just needing money before my paycheck would come through, is the core thesis of my learnings of what is Brigit today.
So did you always, like when you were in college, did you say, right, I am going to start a business one day to do this? Or did that sort of evolve over time?
No, I think it would definitely evolve over time. But the one thing that I did was pretty clear about reading a whole bunch of Wired magazines and spending a good amount of time being educated in the overall technology world, including the fintech world, while I was in college was, hey, I got this entrepreneurial bug. At some point in time in my future, I will try to solve a problem that is hopefully impactful and meaningful for the world and try to build an enduring business at the same time. What that business was, hell, I had absolutely no idea. But what I did know categorically, as I pointed out, was my next role, in this case, in investment banking, would help me give me the building blocks of understanding problems, figuring out market sizing, figuring out being able to understand what it takes to get the right team, to eventually, over the course of what took me 2 decades before I could start what is Brigit today.
So that was interesting. So you were consciously, this was in the back of your mind while you're spending time on Wall Street at an investment bank, the whole time you were thinking about starting your own thing. Is that fair to say?
That is fair to say, but I would like to argue that I was giving it my best, and hopefully my bosses at the time would say I was doing a great job, but let somebody else make that decision for us. But yes, the core thesis has always been, hey, you get to meet these entrepreneurs with you trying to take those companies public. What makes them tick? What a cap table look like? How do these people choose their private investors? But most importantly, as you're going through that, what it took as best as you can from a third party to build what would be hopefully a big enduring company. But yes, all of those little pieces of learnings through the course of my career, including investing in some of those companies, helped us to start our company.
So then just take us back to those early days then, Brigit. I mean, you're trying to solve the problem that you just talked about, like helping people who don't have enough money left at the end of a pay period. What did it look like back then? How did you kind of assemble the team, and how did you get your first product out into market?
The core pain point that I described, which is making sure you had money between paychecks and or not being able to build a credit score because you weren't in the credit system here in the United States. That problem has existed, unfortunately, for decades.
Mm-hmm.
And fundamental thesis, again, as an immigrant coming to the United States 20 odd years ago, the baseline of the credit system, or partially the entire economy, is the historical FICO score. And I wanted to point out, and I saw this very categorically, is like, hey, I'm 20 years ago living between my means. I was earning pretty much more than I was saving, including the fact that my mother was sending me money like clockwork, and I had that scholarship. So if you look at me from a cash flow basis, I was and hopefully continue to be a responsible human being, but I couldn't enter that credit system because everything was anchored up on FICO. And Peter, I will still tell you that I would spend $1,000 a year, give or take, overdrafting because I was too ashamed to ask for people for money because, again, the math would show over a period of 30 days, I was living between my means. So that core pain point that I felt, and the reality is every now and then I would go downstairs to the vending machine and have a Snickers bar for dinner, again, not wanting to overdraft. That fundamental pain point has still continued to exist when we started the company about 7 years ago. Again, we talked about both of us being immigrants. The United States is the single wealthiest country in the world, yet we have 3/4 of our population living paycheck to paycheck. So all I'm trying to point out is that deep pain point that I went through 20 years ago was the core building blocks of what needed to be solved when we started the company. And how I ended up getting lucky enough to find the team. It started obviously with my co-founder. I echoed during this point that part of the problem was FICO is really, really helpful for maybe buying a very expensive apartment that's secured in New York or somewhere else, but really not good at looking at different parts of the population. So my co-founder, who's quite frankly brilliant, Hamill, is somebody who had worked in understanding cash flow analytics and cash flow underwriting well before most people had in 2017. And after lots of trial and error, I was able to find him because he had done some work in cash flow when he worked at Palantir. So that was the thesis of saying, hey, here's a deep pain point. Here's how I envision the product to work, but I need someone who has actually lived and breathed cash flow. And again, going back to 7 years, that really didn't exist much.
I want to talk about overdrafts just for a second, because it's been really interesting to me. We have seen a real shift in the sort of traditional banks and their attitude towards overdrafts. And a lot of it's been driven by the CFPB, but I think a lot of it's been driven by fintech, where there's better options out there now. And I'd love to kind of get your sense of how you look at the overdraft landscape today versus maybe wasn't even 5 years ago, where there was no one talking about overdrafts, trying to get rid of them or trying to change from the traditional banking level. Anyway, what's your view on that today?
So look, I think the government and the regulators, or just people in consumer advocacy, are trying to do the right thing, but there's always levels of detail that people need to understand. So obviously 5 years ago, the overdraft was banks were making $30 billion a year, pretty much a nibbit on helping people bridge the gap between paychecks, as you described. The reality is Chase still makes about $2 billion, approximately a nibbit a year on overdrafts. And if you don't mind, I'm going to break down two different aspects because they generally get lumped into together. One is overdrafts. when a bank provides a service, in essence, a short-term, let's call it a short-term loan to bridge the gap between people's paychecks, so just bridge the gap between expenses. And the other one is an NSF fees, non-sufficient funds fees. So one of the fundamental positives that's happened over the last 2.5 years is that certain banks, including Chase, if you could believe it, have removed NSF fees, which is in essence a tax for not having money and not giving you a service, which is completely ridiculous. So very happy that that particular fee is starting to erode from banks, because it doesn't cost the banks even a penny to have that particular thing happen. So charging $34 in an NSF fee and not providing a service is great, the fact that it's been removed. Now, unfortunately, what people don't realize, including some of the regulators, is a lot of these banks, and I'll give Capital One as an example, when they said, hey, we're going to remove overdraft fees, again, a significant win on paper for the end customer because you're taking away fees. Unfortunately, when you start to go a lot deeper, what certain banks did who eliminated fees also eliminated the service, which is providing, in essence, a short-term loan for people who needed it the most, with or without credit scores. And by doing so, these individuals had to find other forms of credit. And again, let me be fundamentally clear. An overdraft is a ridiculously expensive form of any kind of credit, insanely expensive, but it is convenient and accessible to a large segment. The dirty secret in these banks are, using Capital One as an example, they're not able to make enough money without overdraft fees for certain segments of the population. So even though they say they're removing overdraft fees, they either eliminate that feature completely for the people who need it the most because it's no longer profitable for them, or they reduce the size of what they offer. It's
Right.
not necessarily a slam dunk as some of the press make it sound to be, and as much as we would hope it would be for consumers.
Okay, so then maybe let's dive into Brigit for a second. Explain exactly what you're offering, how it works.
We're the most downloaded financial health app in the United States, very much focused on financial inclusion. What that basically means, it's a suite of tools that provides Americans the ability to get money between paychecks, so an overdraft alternative that we just discussed, to be able to build their credit score by saving. It's kind of a nifty feature instead of actually spending, so that helps you build your savings and build your credit score at the same time, as well as a whole bunch of financial tools, literacy, and financial insights to enable to help you save more money or earn more money. That's the core thesis of what we are.
What is the app providing today? Like when you download the app, obviously you can get an advance. I presume you can get an instant advance, right? But what is it actually, how does it work?
Yeah, perfect. So you can download the app or go to the website, www.brigit.com, BRIGIT.com, insert plug here. And as soon as you do that, you end up getting prompts to connect your bank account. So we either have direct bank connections or use Plaid. We know your income, your volatility of income, your ability to get money between paychecks, or an overdraft alternative or cash advance, as we described. We're also one of the only companies in the world that can predict when you need money, and we can pre-fund money into your own account using our algorithms. This is an opt-in feature. The system realized that last week that my Con Edison bill, the electricity provider here in New York, was significantly higher than my previous month. It alerted me, but it also gave me a piece of content, said, hey, these are the 3 to 5 things you can do to reduce your own electricity bills. So truly actionable insights provided at the right time, combined with the ability to get money between paychecks and build your credit score through savings, are the main features that we provide through Brigit.
Interesting. And so is your business model based on like people paying a subscription fee? I mean, how are you making money?
Yep, we have 1 million paying subscribers, and yes, we are a subscription-based company. That's the predominant form of our revenue. And the reason why we did that because it was fundamentally the most transparent form. Anyone who's signing up is signing up for 2 things. One is they know exactly how much they're paying for and when they're paying for that particular service and what they're getting in return. And at the same side, it is aligned to our users' incentives. And let me explain. Most of our users, unfortunately, do come in at a point of stress where they need money between paychecks, but they end up staying to build their credit score, get those significant financial insights, etc. So as someone goes from using an instant cash product on overdraft alternative to budgeting more effectively, to saving a little bit more, they are going on that path of financial wellness, and subsequently our costs also reduce. So we are fundamentally aligned with the users' incentives. And the reason why we decided on the subscription fee, besides the reasons of transparency and user alignment, was one of our early advisors, Corey Stone, who was in fact initially at the CFPB and had written all the overdraft, or his team had written all the overdraft research, pointed out that this is the fundamentally clear way to offer a service with a true incentive to improve people's lives.
Interesting, interesting. So then when people are doing the advances, what typically is the use case? Because you got a good window into how these people are actually using their money. What are they using the advances for?
It's responsible use cases, and that's exactly the reason why we started the company.
Mm.
So whether it's a combination of needing gas when you talk to the users, it's actually going in order to go to work, being able to sometimes pay their rent, and one of the other use cases is just being able to use their phone as well. Those are your top three use cases. And I hate to say this, food.
Right. Wow.
And the point that I'm trying to make here is going back to this journey 20 years ago or even 7 years ago. Again, sorry to point this out, but we are the wealthiest country in the world. And the number of people living paycheck to paycheck, besides it being 3/4 of our adult population, has only been increasing year over year.
Yeah, I know. It is crazy. And so you've got 1 million paying customers. I'd love to sort of get a sense of, you said they're doing responsible things and they're saving more, but how are you measuring whether they are financially better off than they were when they started?
I appreciate that question. So the good news is we've got a number of social impact investors who also have research organizations, and one of the things I'm most proud of, and we hit this number earlier this year, since the time we started the company, is we've helped save our users. Again, according to one of these research funds, over $1 billion in overdraft and late payment fees.
Hmm.
That makes me fundamentally happy. That
Right.
makes our team truly excited. Like, our core goal again is to use cash flow next generation data to help solve these problems where we can help people, as I pointed out, earn more money or save more money. That is a point that makes me happy. We also use third-party agencies to help us understand what percentage of our users feel that they're achieving their financial goals, specifically because of Brigit. And that number has been 94 or above percent of our users, which again, these are the reasons you can probably hear it in my voice, gets us excited to go to work. This is the reason that gets us excited to do what we do. So those are some of the ways that we do it. And when we look at it over the period of the last 2 years, our users end up, because they end up using our product, save about $400 a year because they're using Brigit, because we're helping them save or earn more from the core products. And the last thing I'll say is the main reason why people leave Brigit is because they don't need our product anymore, be it for needing money between paychecks because they've been able to save that $300-400, as I mentioned, over a course of the year, and they can use it for anything, as far as I'm concerned, is better off than I don't want to point out Chase, but paying Jamie Dimon's bonus, for example. But that is on us to continue to provide more and more value from our end customers. But it is also positive when you look at people's lives, the main reason they churn is because they don't need our products, because they have improved their financial lives.
So the advances, though, are they tied into a paycheck, or how are you kind of ensuring that you get that money back?
Yeah, they're not tied to a paycheck per se. I think I want to be very careful when I say this. We obviously anticipate when people are going to get paid, and subsequently we very clearly tell people how much they're able to borrow, when they need to pay it back. We also have extensions where they can actually extend. It is tied with the expectation that person is employed and how much that person is making, hence the earned wage advance aspect of this. But again, I want to be very clear that people know when when the money is going to be taken out, and have the ability, free of cost, to extend that as well.
I'm curious about how you feel like the earned wage access industry obviously has had a lot of activity, a lot of focus on the regulatory front, with the CFPB coming out with proposed rules. What's your official stance on that? Because you're a little different to some of the other players, but I'd love to kind of get your perspective there.
Sure. Look, I mean, for any regulation, be it state or the CFPB, I think it's fundamentally important to look at it from two ways. One is start off with the customer. You have to, whether it's for everything you do, you got to start off from the end customer. Are these products helping people? Under what circumstances are they not helping people? At some point, you have to compare these products versus other products else out there, and actually talk to the people. It's a hint there. The people really do a deep understanding and analysis of how good or bad these products are, whatever that product might be. So that is one area that I fundamentally believe that any regulator, state or federal, should be spending their time on. And I think to a large degree, a lot of them do, and some don't. The next part of it is, look, technology has evolved. We are in every year, every day, quite frankly, every second with the state of AI per se, technology is completely evolving. Let's take a holistic approach to say, hey, what are the best products and the best solutions for the end customer, leveraging the new data and new technology that's available, that's out there, and making sure that overall that technology and that product is doing good for the end customer. I think as long as that both those things are followed, don't ignore innovation, because guess what? Innovation can be fundamentally good. That's why we're here where we are today. 100 years ago, we wouldn't be having this conversation, or hell, even 5 years ago. So have a nice balance between starting with the end customer, servicing the end customer most effectively, and making sure you're using and updating your own policies based on technology.
Okay, so with your advances, how do you decide whether or not to approve any particular customer? And I imagine they have to have a wage that's going into their bank account, right? But what's the underwriting process like?
Sure. What we do is we look at a number of factors, including people's paycheck, their income, how often they get paid, as well as their overall spending habits. And we use that to understand the riskiness of the end customer, and subsequently allow them a certain amount of EWA advance.
So then what percentage do you approve of those people that are trying to come in?
Well, it depends on the cohort, as you'd imagine, but we have among the highest approval rates at about 50%.
Okay, that's fair.
Yeah. And again, it's based on a number of factors, and most of the people we're not unable to approve are people who don't have income.
Right.
Hence the earned wage access part. But keep in mind, there are a significant number of those million customers. For example, we've got well over 100,000 people, paying customers who use our credit building product as well. So not everyone is only using, because it's a financial health app, and we've got those multiple products working cohesively together.
I'm curious about whether you see that are people becoming more educated about finance because of some of the best practices that you're encouraging?
100%. Again, so there's the entire app. So keeping aside the earned wage access or even the credit building part, which obviously advises people partially on how they can improve their credit score, pay more on time, etc. Keeping that aside, we have a treasure trove of financial content in our app, right, and that's delivered to you, each individual, at the right time. I gave you that one example of a financial tip, which is, hey, my Con Edison bill, etc., what I can do myself to save money. So it's more of a self-help actionable tip. But even within the app, if the user sees, hey, this, again, all driven by algorithms on changes in cash flow, this person's trying to save more, we have a piece of content that they can either access within the app or the website, or it's delivered to them at a certain point of saving, saying, hey, you were able to save this much money this month. Here's 2-3 other things you could do to help build a nest egg. So in terms of being educated about their financial habits, including being able to earn a little bit extra, and we didn't talk a little bit about that, all of those things are part of our content library that we provide.
That's great. So I just want to talk about credit building for a little bit. I'm a big fan of credit builder products, but there's been if you read the fintech press, there's some people who are pretty negative about it because it's not providing a signal to lenders whether this person is actually going to repay. I want to get your perspective, because I've got my own thoughts on this, but I'd love to hear yours.
No, I think you're dead right. I think there are certain credit building products out there, and we can talk through which ones per se, maybe offline. I don't want to call anyone out.
Not naming names.
Yeah, not naming names, but who provide absolutely, in exactly your phrase, no signal to the credit bureaus. And in those cases, they're trying to quote unquote hack the credit system, where they only provide positive reporting. That is, pardon my expression, garbage signals to the credit bureaus, whose responsibility is to understand and assess risk for their end customers, right? And again, there are a lot of those quote unquote hacks. Our credit building system is different, and let me explain why. First of all, it's reported to all 3 major credit bureaus, and in fact, for 2 of the 3 credit bureaus, we have relationships at the C-suite, who've approved and actually like this particular product because it includes more, it expands the number of people in the credit system. We provide a product that has been working with community banks for the last 30 years. All we've gone and done is taken that same core structure and made it mobile, where every time someone actually helps save money, so in essence, it's a credit building account is what it's called, that is reported to all three credit bureaus as well. Now, the other difference is when someone does not pay on time, we report negatively as well. And anytime someone closes their account, all of that is echoed right back to the credit bureaus. So the most important point, as you've pointed out, from a credit, the efficacy of a credit building product is that it provides positive, but equally important, negative signals back to the credit bureaus. And it's structured in a ideal process that has precedent for the last 3, 4, 5, maybe in our case, 30 years.
I think it's such an important product. It's such an important concept. And we want to provide good signals to the credit bureaus, and we want to help people at the same time. Those two things should not be mutually exclusive. It sounds like you're threading the needle there. You mentioned about like earning more money. What are you doing on that front? How are you helping people increase their income?
So again, everything that we do is try to be as personalized and providing these, to echo this again, the right message at the right time. So unfortunately, sometimes we see some volatility of income for some of our customers. And again, using the fact that we look at their cash flows, or the systems look at the cash flows in real time, sometimes we see that. And every now and then the system will say, hey, we've unfortunately noticed some volatility in your income. Here is a survey partner of ours that you can spend 5 minutes and earn, let's call it $5. I mean, insert the right amount here, that it can help bridge your gap between a little bit of your paycheck between now and then. Alternatively, if we see wider gaps of volatile income, we can also suggest some part-time jobs that our partners provide.
Okay, so you mentioned the million paying customers. Can you give us a sense of like scale as far as the team goes?
Yeah, no, we're proud of this, and we're happy to share some of these stats with you. So we have a little bit less than 100 people, and last year we did over 100 million in revenue, and we continue to be profitable.
More than $1 million per employee. That's a great stat.
Yeah, I mean the reality is it's less than 100 employees today. Last year we were at 70, so
right, of course,
you can figure that out. And one of the reasons why we look at that as a stat, another stat that we're proud of, is because it helps show the world, investors and anybody else, partners, that the core technology, the fact that we've leveraged cash flow technology, and that's really what we do, and the core stack that we've built, and all of it's built in-house, is fundamentally effective. Because you won't be able to get 1.5, 2 million ARR per FTE if you're not able to have a true scalable technology. And all of that, as I keep pointing out, without being a broken record, it's really based on cash flow. Everything we look at is your income, your volatility of income, historical spending patterns to solve the deepest pain points for what is the widest segment of the population.
Okay, so then totally random question. Why did you call it Brigit?
Aha, I appreciate you asking that question. So we help bridge your gap between your financial now and your financial future. That is the core reason why we call it Brigit. And the person who helped us name it also realized Brigit also sounded like a slightly older aunt who would be more responsible about money and help you guide you through that as well. So those are the two reasons.
Okay, interesting. Okay, so then last question. What's your vision here? Where are you taking Brigit?
It's pretty simple. It's fundamentally simple. We truly believe to impact people's lives and improve their overall financial health, you need to give something that's fundamentally personal, where it reacts, as I pointed out. If you see someone make a little extra money, be a little bit more volatile, find ways for them to help save in the simplest manner, that is core what we do. So we will sit on top of any bank out there, digest cash flow information with the sole purpose of making sure you have money between paychecks, whether it's through saving a little bit more, earning a little bit more, building your credit score and refinancing whatever existing loan, all of that delivered in the most seamless manner to you. That is the core focus. And we're only at 1 million people today. Unfortunately, we've got another 100 million to go.
Okay, well, good luck. I hope you get there one day. It's been great chatting with Zuben. It's been overdue getting you on the podcast, so I'm glad we finally got to do this.
Oh, thank you so much. I appreciate the time and patience.
Well, I hope you enjoyed the show. Thank you so much for listening. Please go ahead and give the show a review on the podcast platform of your choice and go tell your friends and colleagues about it. Anyway, on that note, I will sign off. I very much appreciate you listening, and I'll catch you next time. Bye.